Welcome back to America's Retirement Headquarters, home of the Retirement Guys formula and America's Medicare Associates with Jeremy Baker and Dave Ross. 419-794-3030 is the phone number. It's 419-794-3030. The website is arhq.com. Congratulations to the Los Angeles Dodgers, once again World Series champions. What you may not know is that players like Shohei Ohtani, Mookie Betts, Freddie Freeman, Teoscar Hernandez, and Will Smith actually deferred millions of their contract money for years to come, even after their playing days are over. The Bobby Bonilla strategy, though maybe not as disastrous for the organization. The primary reason they did this is to pay less taxes over the long run. Here we are as approaching the end of the year. How can you guys help your clients benefit from deferring income to optimize their tax savings?
Well, I think anytime you can defer income, that's going to help you. If you're able to defer income by investing in a way that defers income taxes, that's an even better way. The question that always is important with this is, what is the best way, what is the best method to defer income? And I think there's a number of different ways that you can do this. And when we do a retirement team action plan, one of the things that we really talk about is reliable income. So when you look at the reliable income category, you're looking at Social Security, you're looking at savings from a 401k or a company pension or an employer pension that you're entitled to. And quite honestly, there are a number of different things that can be considered here. You know, here's the thing, and this has been a topic for a fair amount of time now. When I ask clients, and I bet Jeremy would say the same thing, when I ask clients what they think the tax rates are going to be 10 years from now, they're all going to say it's higher. And the baby boomer generation, of which I happen to be part of, they have been fabulous at saving and investing well. So if the government needs to collect tax revenue to cover a shortfall, where's the easiest way to do it? It's going to be to tax retirement accounts. So should people start turning on their retirement savings a little bit earlier than it's currently age 73 on required minimum distributions? Should they start the income stream a little bit earlier? Perhaps they should. Should they be considering Roth conversions? I think a Roth conversion discussion is a worthwhile discussion for anybody. Do I think it's good for everyone? No, I don't. But that's an individual situation. The other thing that people don't really think much about, Jeremy, is optimizing Social Security. When they retire, they say, oh, I'm going to turn on my Social Security. But sometimes it would make sense to maybe draw from retirement savings and let the Social Security pile up for a while longer.
That's often the case. And first of all, let me say congratulations to the Dodgers. I've been a Dodger fan since I was a kid. I had a Fernando Valenzuela glove, and then Kirk Gibson. You know, I'm originally from Detroit. When Gibson went out to L.A. and hit that home run, that was, I think, back in like 88. I was about 14, 15 years old, and that was pretty awesome. Not to turn this into a sports show, but I could talk sports, and I know Dave can, till we're probably both gray in the hair. But speaking of Social Security optimization, there's a report you can do. We can, in fact, do it for you that shows you the optimal way to collect your Social Security. Social Security is generally about 85% taxed in retirement. Not to say it's an 85% tax rate, but generally about 85% of your Social Security income is taxed. So deferring as much income as you can in retirement is to your advantage. Also, you know, we talked about America's Medicare Associates here in the building. Keeping your income level down is ironically helping to keep your cost of insurance down as well. So the other thing I would consider is what I call a tax control triangle. And what that is having control of your distributions, because there's Roth IRAs, different strategies where you can get tax-free income that's non-reportable. There's, you have your 401ks, your IRAs, those are going to be fully taxable. And then you have your non-qualified assets that are going to be partially taxed and based on income tax rates and capital gains. So the important thing is having a little bit of in each bucket and then being able to control where you take it from and not have somebody tell you, like the government when you hit age 73, they're going to tell you, hey, you're going to have to take some money out of these retirement plans and pay taxes on it whether you like it or not.
The other thing I would add with all of that is if a lot of people are retiring at 62, full retirement age isn't until 67 for people that were born after 1960. So if they want to turn on Social Security and keep working, then you bet a lot of that Social Security is going to be income taxable. Plus, you have to worry about the threshold of how much money you can make, because if you go over that threshold, it's around $23,000 a year.
Not very high.
You lose $1 of benefits for every $2 above the threshold you make. And let's say, and I have a situation where I experienced this. I met a guy who had been retired for a year, and he said, I retired, I turned on Social Security, and I was bored stiff. I got tired of sitting around home. I was spending a lot more money, so I went back and I got a job. Well, to make a long story short, his entire income offset his Social Security, and he did that job for a couple years, and he enjoyed it, but then he retired again, and guess what? They turned on the 62 number for him, not the 64 or 65 that he should have. If he'd have kept going, he would have definitely had a better value. So that decision on when to turn on Social Security, that's an irrevocable decision. Once you turn on the spigot and the checks start flying, that's what you're going to get. And so you need to really carefully plan how you're going to do that. And that's where we can help here at America's Retirement Headquarters. That's a big part of the Retirement Team Action Plan. And we would love to get together with all of you and see how we can help.
Because at the end of the day, whether it is market volatility, whether it is paying more in taxes, paying more in Medicare, or seeing a lifetime reduction in benefits in the form of Social Security because you claimed too early or before you needed to in your plan, that is less money in your accounts. That is less money you can utilize towards retirement. So with proper planning, you can counteract that, hopefully avoid that, and be able to enjoy as much of your hard-earned dollars as possible. But it comes down to, of course, having that plan. America's Retirement Headquarters can help you with that, courtesy of the Retirement Team Action Plan. To find out more about that and set up a time to speak with them, go to arhq.com, or you can give a call as well and set up a time, 419-794-3030. Once again, that's 419-794-3030.